Hello everyone. Welcome back to my channel. Today I'd like to share 5 penny stocks with massive growth potential. The first stock on the list is ALJ Regional Holdings. ALJ Regional Holdings Inc. is a holding company, which engages in the provision of outsourcing services to commercial and government entities. It operates through the following segments: Faneuil, Carpets, and Phoenix. The Faneuil segment offers call center services, back-office operations, staffing services, and toll collection services. The Carpets segment manufactures and sells flooring, countertops, cabinets, window coverings, and garage and closet organizers. The Phoenix segment produces and markets books and educational materials. The company was founded by Mark Palmer in 1998 and is headquartered in New York. ALJ Regional Holdings was a big after-hours gainer on Friday, after releasing its first quarter 2021 results. In its first quarter 2021 results, the company brought in more than $119 million in revenue. This represents an increase of around 32% over first quarter 2020. The company also managed to more than halve its loss per share from $4.3 million to $2.1 million this quarter. Lastly, the company brought an adjusted EBITDA of $6.3 million for the quarter, almost double what it did in the previous year's same quarter. All of these numbers add up to show that ALJ Regional Holdings could be in a position for growth. Obviously, it will take some time to see if it can continue growing at this rate. In the meantime, however, ALJJ could be one of the penny stocks to watch next week. The second stock on the list is Pyxis Tankers. Pyxis Tankers, Inc. is an international maritime transportation holding company, which engages in the maritime transportation business with a focus on the tanker sector. It acquires, owns, and operates tanker vessels that are capable of transporting refined petroleum products such as naphtha, gasoline, jet fuel, kerosene, diesel and fuel oil. The company was founded by Valentios Valentis on March 23, 2015 and is headquartered in Athens, Greece. Because PXS stock tends to shift in correlation with the energy industry, it has seen more bullish interest in 2021 than usual. Pyxis operates 5 double-hull product tankers. In its financial report released in November of 2020, Valentios Valentis, CEO of Pyxis, made a statement regarding the company. The chartering environment for product tankers in the third quarter of 2020 continued to be very challenging, reflecting the normal seasonal softness which was further compounded by the negative impact of COVID-19 on demand for refined petroleum products. In November, we typically start to experience a seasonal boost in demand due to the movement of home heating oil cargoes and weather delays. This sentiment seems to illustrate that the demand for its services is cloudy in the near term. However, the energy sector is expected to grow slowly as virus cases decline. Because of its relationship to energy, traders should keep an eye on oil and gas demand moving forward. The third stock on the list is ATIF Holdings. ATIF Holdings Limited is a holding and consulting company. It provides financial consulting services to small and medium-sized enterprises. The firm operates through the following segments: business advisory and consulting services, multi-channel advertising services, event planning and execution services, and movie theater operation services. ATIF Holdings was founded on January 5, 2015. Shares of ATIF Holdings continue to rise, though volatile, to new highs this week. If you look at the bigger picture of this chart, there is a clear uptrend. But on a day-to-day basis, ATIF stock generally sees intraday swings of 10% or more at times. Furthermore, if you're looking at different technical setups, ATIF stock has finally made it back to a level that shares gapped down from back in November. A gap fill is usually seen as a sign of strength and has come after a series of catalysts helped propel shares. In a recent letter to shareholders, CEO Pishan Kai discussed several key updates for the market to focus on. Some of the more notable include $7.8 million in consulting service agreements from February to November were signed with companies anticipating their entry into the U.S. capital markets. The company also relocated its headquarters to California and launched a new asset management business model. This has become the main focus of ATIF, and this month the company completed the filing of its private ATIF 1 fund. While this could be one of the hot penny stocks to watch, it's worth recognizing the increased volatility levels in the market. So if it is on your list, keep that in mind as share prices can fluctuate 10% or more on any given day. The next stock on the list is Globalstar. Globalstar Inc. provides mobile satellite services, voice and data communications services through satellite worldwide. It offers communications services via satellite, which includes two-way voice communication and data transmissions using mobile or fixed devices, and one-way data transmissions using a mobile or fixed device that transmits its location and other information to a central monitoring station. The initial spark for its bigger 2021 move came after Globalstar announced that its partner, none other than Nokia, entered into an agreement to deploy Globalstar's Band 52 spectrum at the Port of Seattle, Terminal 5. This was the second deployment between the two companies at a U.S. port. Moving forward, Globalstar continued reaching new milestone deals with the likes of Series Tag and BattleBox via its Spot LLC company. The company's Band N53 was included in Qualcomm's new 5G x65 modem. GSAT stock popped big this month and came back down swiftly for new 52-week highs. There weren't any negative headlines to suggest a mass exodus from the stock. However, it may have been another instance of profit-taking. Friday, GSAT stock has continued reversing its trend and may be a trend to monitor. The next stock on the list is NGL Energy Partners. NGL Energy Partners LP engages in the ownership and operation of a vertically integrated energy business. It operates through the following segments: crude oil logistics, water solutions, liquids, refined products and renewables, and corporate and other. The company was founded in 1940 and is headquartered in Tulsa, Oklahoma. Earlier this week, NGL Energy announced its third quarter fiscal 2021 results. In the results, the company made several exciting announcements. This includes an adjusted EBITDA of $125 million, which is less than the $200 million it reported in third quarter 2020. Investors should take this decline in EBITDA with a grain of salt. If we consider the pandemic's effects on energy consumption and production, the decline in EBITDA makes sense. In addition to this, the company announced the successful start of its Poker Lake pipeline. This pipeline alone could produce upwards of 350,000 barrels per day of oil. Mike Krimbill, the CEO of NGL, stated that, subsequent to the quarter's end, we successfully extended our short-term debt maturities and provided the partnership with improved liquidity and a long-term runway with which it can concentrate on deleveraging the balance sheet with an eye towards reinstating both the preferred and common unit distributions. Obviously, the company is working hard to beat out any issues regarding COVID on production. And while the short term may affect demand, NGL could be worth watching in the long term. Thanks for watching. If you liked this video, hit the subscribe button to receive more like it in the future.